Ansari increases the size of the retail tranche of its IPO, and G42’s Presight AI to debut on the ADX next week. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. Ansari Financial Services has increased the size of the retail tranche of its IPO from 5% to 7.5% of its share capital due to strong investor demand. The UAE-based exchange house is looking to raise up to $210.4 million. The global offering size remains unchanged at 750 million ordinary shares, which is 10% of its issued share capital. The qualified investor tranche has been reduced to 92.5% of the total shares on offer, down from the previously announced 95%. The UAE's Presight AI, a G42 big data analytics firm, has confirmed it will debut on the Abu Dhabi Securities Exchange next week. The company's shares will start trading in the first market. The AI-powered firm recently concluded its IPO that drew $25.8 billion in orders and was 136 times oversubscribed. Presight saw $423 million in revenue for 2022, up 16% from the previous year. Gross profit for the same year stood at $266 million, up 92% from 2021. Asian markets dipped today after a broadly healthy week. Lingering concerns about the banking sector played against hopes that central banks may end their interest rate hiking cycle. Support for troubled lenders and depositors provided stability for investors who were worried that the troubled banking sector would usher in another financial crisis. The Nikkei closed down 0.1%, the Hang Seng closed down 0.8%, and the Shanghai Composite dropped 0.6%. American banking giants have warned employees not to prey on banks in distress. Internal memos show JP Morgan told all employees they should not make disparaging comments regarding competitors. It said they shouldn't solicit client business from an institution in distress. Citigroup gave similar guidance to its business heads, saying they should not discuss the standing and condition of other banks. Top executives at Bank of America were also briefed that their employees should not be going after the customers of distressed banks. Block Inc. and Twitter co-founder Jack Dorsey's net worth has plummeted after Hindenburg Research's latest report, which alleges his payments company ignored widespread fraud. Dorsey's fortune dropped by $761 million overnight, leaving him with $4.2 billion, according to the Forbes Real-Time Billionaires ranking. It's his worst single-day loss since May. Hindenburg released a report yesterday claiming the Block stock has inflated user metrics and has a downside of 65 to 75%. Block subsequently closed down 15%. And staying with today's Forbes Real-Time Billionaires ranking, let's take a look at our biggest loser today. It's Elon Musk. He's down $3.5 billion, but still with net wealth of $192.6 billion. Our second biggest loser today is Jeff Bezos, down $1.9 billion with net wealth of $121.8 billion. And our third place loser is Warren Buffett, down $1.8 billion with net wealth of $103.9 billion. Check out our website and our social media for all of the latest Billionaires news. And South Korea will seek the extradition of fugitive crypto entrepreneur Do Kwon after the Terraform founder was arrested in Montenegro and hit with U.S. fraud charges. Kwon was using fake travel documents from Costa Rica at passport control while trying to board a flight to Dubai. Kwon is accused of fraud over Terraform Labs' dramatic collapse last year. It wiped out $40 billion of investors' money and shook global crypto markets. Kwon is also wanted in South Korea for violations of their Capital Markets Act. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. Have a great weekend.